Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, October 22nd. Another back and forth day in the market. NASDAQ up a little bit, other indexes down. Nothing too dramatic overall, as the market's still trying to figure out what it wants to do with its life. Really quickly, before we jump into today's price action, we do have plenty of earnings coming up before tomorrow's open. Pretty light here this evening with Cadence and Zions coming out after today's close, but tomorrow before market open, we have about 20, I believe it's actually 21 S&P 500 companies reporting earnings, including CAT, United Technologies, Biogen, so some fairly good-sized companies, Verizon. So definitely we are in the middle of earnings season. It's going to keep on coming for the next week, week and a half. So make sure you are, of course, staying on top of those earnings calendars and making sure you're aware of each and every earnings report that can impact your trades. Shifting gears over into our broad market, here we have the S&P 500. Unlike the last couple of trading days, where even though it was very volatile, we were able to actually hold the 200-day moving average, today we did close below that. Now, I don't think when we're sideways, and I've said this before, it doesn't really concern me as much. When we're sideways, that average kind of gets stuck in the middle. And of course, as we looked at much of last week, our support is a ways away, as is our resistance. So while it's not a great thing, it's definitely a little bit of a bad thing in my mind that we did break that 200. Really, I think we're looking at these two price ranges as we look at the S&P 500. We're still pretty smack dab in between those two averages. Over on the NASDAQ, was able to close above the 200, briefly got fairly close, kind of testing those intraday lows from Friday and Thursday to close pretty flat overall on the day, closing up a little bit though. Really not a whole lot has changed there. Looks very much like the S&P, other than we're on the right side of the 200, at least from a bullish perspective, but really still continue to be very indecisive, very volatile as traders are trying to figure out what the heck they want to do with this market. And personally, I do expect that until we kind of wind through earnings, that these are the type of days we should probably get used to. Taking a look over at the Dow Jones, very similar, not a whole lot new to report over here. Again, a little bit of a feather in the cap, closing above the 200, but still smack dab between support and resistance. Over on the Russell, I think you could argue, although it's going to be real close and probably depend on your definition, that we broke down even further here today, closing below Friday's low and the low point that we set up. Now, we did not hit the actual intraday low, so that would probably depend on your definition, but certainly not a great look. The bears continue to be in charge over there. Certainly from a technical point of view, continues to be the weakest of our indexes. Again, whether you call it a clean break or you're waiting for it to break the actual low point, not a very bullish looking chart over on the Russell. As we shift into our materials, of course, Friday they had closed below that support level. We talked about today's momentum. If we broke that low today, that would be a pretty good sell signal, and that's exactly what did happen. Very bearish over there. We've got quite a ways to roll before our next real level of support. Now we know that we should not be going above resistance, and there's really nothing to hold us up for the foreseeable future over in the material sector. Again, earnings can change this. That's why it's such an important time of the year. But from a pure technical point of view, that's a pretty bearish signal following Friday's close below that support level. We actually also broke down further in energy, very similar to our materials, where pretty bearish development on Friday, saw that downward movement here today, triggering a whole lot of bearish activity, really pretty ugly. You know, we've, again, much like the material sector, to me at least, to my eyes, we have quite a ways to go. And forgive me, I can't draw straight lines. We have quite a ways to go before our next level of support. So again, pretty bearish development. Now 2 days below support with really very few buyers. I guess we did come up off the intraday lows a little bit on the energy sector, but nothing really notable. Broke down over in the financial sector, again, much like the Russell, we didn't take out the shadow or wick or tail or whatever the heck you want to call it. but we did cleanly close below that previous support from back here. Again, another very bearish looking chart overall. So, I mean, we're not seeing a lot of strength in a lot of these sectors, right? Hey, guess what? Industrials did the same thing, carrying over that momentum, just like materials and energy. Not a lot of support. It's a pretty important time for the market. You know, I think it needs some earnings to make it happy. A lot of our charts are looking pretty grim. Technology actually is not really one of them, though. It held up pretty well today. No surprise with the NASDAQ being the top performing index, closing above the 200. Started actually seeing a little bit of upward movement. Again, that's not nearly enough in my estimation to say that it's time to go bullish, but it is a little bit of a positive development, especially when we compare it to some of the weakness that we're seeing in some of our other sectors. Continue to trade, you know, again, between resistance and support. We are stuck in the middle, but certainly today showing relative strength in that sector. Over on staples, had some profit taking coming in off of last week's rally. Certainly, Procter & Gamble's earnings played a part in that. Really nothing really new to report here. We've kind of broken back into this old trading range. We're closer to resistance and support, but really not by far. Maybe watch this 50. You know, I don't like this sector. I was, you know, looking at it from a bearish retracement point of view. Ultimately, that never developed, and we're back into this range. Watch the 50 to potentially act as a support level for us as we move forward. But really, when we see these type of patterns, again, remember our whole real premise is this old support, which became resistance, which is now support again, should hold for us. So there's a little bit of room to go either way on this guy. I'm not a huge fan of that charts that look like that, to be honest with you. They're really indecisive to me. Over in utilities, we continue to fight at that major resistance level. Can't be unhappy about it, holding up fairly strong. And we've looked at this for several months together. This has been a pretty significant level of resistance. It's going to be a battle, though. It's hard to break resistance, but really our trend overall remains intact. Things are looking strong from that perspective. I do think that when you're thinking about utilities right now, maybe we watch for a pullback or watch for a break. Don't think this is a great place to be buying utilities personally because, well, we've seen how this price has really impacted them in the previous few months. Over in healthcare, just cannot seem to get the ball rolling. It's getting awfully close to testing that support level. That's going to be important. Healthcare has been very strong up until the last couple of weeks, of course, and it's breaking support would not be good. From a technical point of view, you're already seeing some stocks like AbbVie breaking through support levels for the first time for a lot of these healthcare stocks in quite some time. That support level, to me, is going to be very important in the healthcare sector. We're getting awfully close to that. Not there yet. Don't have to get there, but I would be keeping an eye on that price point. Again, though, much like our overall market, we are getting closer to the support than resistance, but we are kind of trading in that in-between range right now. Over in discretionary, we are testing support. Can look at that as a potential support bounce if we see upward movement. That's not my cup of tea on when it comes to technical analysis, but I get it. I understand people betting on support, buying at support, so that makes sense if that's what you want to do, but also can look at it from a bearish breakdown perspective. If this breaks that support level, that would give us more reason to believe that the bears are firmly in control of this. We've already failed, at the 200. We've already broken down. This was selling off before the market was really selling off. Been a very weak sector. I'm looking at it from a potential bearish breakdown point of view. But again, I'm not ever surprised when things fight, and sometimes support wins. It's hard to break support. It's hard to break resistance. And of course, lastly, a lot of bearish activity over in real estate. We've been watching this one for some bear retracements over the past week. Really, this is our first bearish signal, in my opinion at least, that we've had on this sector. We've kind of ran into that old support, into that 200-day moving average, and that's kind of been the price we've been looking at. We never had any real movement to the downside. Obviously today, pretty darn close to a bearish engulfing candle. That's a pretty bearish candle. I think that if we get some more downward movement tomorrow, I think that can be a trigger for a lot of traders in this sector that a lot of traders are overall bearish and I would definitely consider myself one of them on the real estate sector. Look for that to happen. Another thing that we can now do, and this is why it's always so nice, now we know where this 32 is becoming very important. And yeah, we're a ways away from it right now, but that's really starting to develop as a little bit of resistance for us. So if we start to push back up and we don't get that continuation of selling here as the week progresses, we can watch that as a show of strength. If we are able to break that, I'm not holding my breath, but if we are, that to me at least would be a sign of strength. I'm not expecting that, but I don't know the future. I do like the way that chart looks. A lot more indecision over in the communication services as some of these companies are yet to report earnings. We had Netflix who had a great earnings report last week, but traders didn't care. It's continued to sell off ever since. But we really continue to be pretty back and forth and fairly volatile within that sector as of right now. As we shift gears over into our metals, continue to hold on the gold breakout, continue to go back and forth, a little bit of selling, but we are still very much in this trading range. The longer we are in this range, the more open I'm going to be to being excited if and when we break the top of this trading range. Obviously, that hasn't happened yet, and of course, it may never happen. But whenever we see these long developing floors or ceilings, well, we've seen how we can see quick price movement when they break. So as we continue to kind of hover in that 1225 to 1235 range on gold, if that were able to break, I wouldn't be surprised if we were able to see a little bit of a oomph up into the 1250s, where there really is kind of our next level of resistance. But mostly right now, again, like we said pretty much all of last week, every day that we're able to hold this breakout point is just one more day that bears are saying, okay, it's not going to retrace, it's not going to reverse. And another day that bulls can say, okay, now I finally believe in this breakout. Nothing really has changed technically on my end. As long as we hold 1220, I think that this is a bullish place to be. It just is not taken off or anything like that. Looking at over at silver, very similar situation to where we found ourselves most of last week, where we kind of are holding above that 50-day moving average, but not really getting any momentum to the upside. I haven't changed my opinion, and that's probably not a bad thing because the chart really has remained unchanged for a while. I still think you're looking at 15 as confirmation of reversal, which I do think is a good technical signal. But like I said, pretty much all of last week, I get people buying here in the middle. My issue with it is I think 15 is a big deal, and that puts the risk to reward ratio in question. If you're buying at this price, I think your stop needs to be down here because that's really what the support level is. And it's just hard to, see that being a great risk to reward ratio, at least to me. So I will continue to be watching at 15, but I certainly understand people who are willing to take a shot here as well. As long as it holds that breakout point, much like gold, I'll remain overall on the bullish leaning side of things. Over in natural gas, saw a lot of selling, and I think even a little bit of a break of that swing support here today. I'm not loving it, not loving it at all. We do have a pretty significant support level down at that breakout point, right? We watched that breakout. We saw it on the weekly chart at around 3,050. That's a pretty important price, in my opinion. I wouldn't be surprised if we can work our way down to it. Now, we didn't close too much below support here today, and so I wouldn't call this a clean break necessarily, but I would not call it a bullish development either. I want to make sure if I am looking at buying off of this potential retracement or bounce or whatever the heck you might want to call it, I want to make sure I'm back on the right end of that. Right now, I think you watch natural gas. I don't really see a great trading opportunity down in that, like I said, that 3,005 area. Yeah, I could see that being a very interesting price if we do get to it. Crude back and forth here today, kind of trading basically off of the high and lows from Friday. It really, I think when we look at crude, I think it's a pretty easy read. The buy is back above 70, the sell is if we break, but it's hard to want to sell there, at least from a bearish perspective, because that 200-day moving average is pretty darn close. I think you're really looking at crude working towards the 200 or back above 70. At least that's what I'm looking for. I guess I shouldn't tell you what you have to look for. That's up to you to decide. But for me, I think you're looking for the break of 70. Now, intraday, I think you could look for selling opportunities as we approach that 70. That's, that's not been quite 70, but I think you can look intraday to sell off that price. But from a swing perspective, I think you're looking at above 70 or back towards the 200-day moving average before you start to really think there might be a good trading signal there. And lastly, over on the dollar, it's going to make us wait. The dollar index, I know a lot of people are thinking if it can break that swing just north of 96, it should have a pretty easy run up into the 97 range. I don't really disagree with that. We kind of closed right there, just like we did the last two trading sessions, right? Thursday, we were up there. We sold off of it on Friday, but really it's fighting with that resistance. And if you are looking at this from a bullish breakout perspective, well, that's okay. Maybe it breaks tomorrow, right? It doesn't have to break today. Clearly, that's at least a level of short-term resistance that is causing it some issues right now. I'm not going to be surprised if it gets pushed down either. I think that 96 is becoming more and more important with each and every passing day, technically, on the dollar. So I think that's the price that we're watching, whether it's, we're betting on that holding, we're watching for a break, whatever the case might be. I think we have good enough evidence right now to believe that 96 or approximately 96, probably a better way to put it, is pretty important for the dollar index right now. So an interesting day, seeing some weakness. We're seeing breakdowns in the industrial, breakdowns in the materials, in the energy. So some pretty ugly things going on right now as the market remains volatile. I think we're still, can trade. I think we're going to have to be very careful, make sure we're following our rules. I don't think there's anything wrong with changing our strategy, whether that's lowering our position sizes, using spreads as opposed to directional options, or whatever the case might be. It's a volatile market. Again, pretty solid market from a day trading perspective, but swing, we are seeing a lot of back and forth, which can result in some frustration and some stop out issues. I would expect, and again, I don't know the future, but I would expect as we work into this and next week, as we get the bulk of the earnings behind us, we should start to get a little bit of clarity, a little bit of simmering down on the day-to-day volatility at least. So let's hope for some interesting earnings, right? Hope for a consensus. It was a good or a bad earnings season, whichever one. Don't be split right down the middle, right? 50-50. So with that, ladies and gentlemen, that is where we find ourselves after a pretty interesting Monday. As always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the Tackle Trading YouTube channel and hit that notification bell if you haven't already, so you can be alerted to any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're keeping an eye on during the market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track. And with that, get out of here. Happy trading, and I will see you in the next one.